Accounting process. Journal entry. Posting to ledger. Trial balance. Balance sheet. Adjusting journal entry. And adjusted balance sheet. Journal entry. Journal entry has a debit entry and a credit entry. A journal entry consists of date, account title, journal number, ledger number, description, and amount. Bought 100,000 pesos inventory for cash on November 29, 2021. On December 1, 2021, the company paid insurance amounting to 50,000 pesos, good for 2 years. On December 10, 2021, the company sold 8,000 pesos inventory on account for 10,000 pesos. For illustration C, we will make 2 journal entries, first the recognition of sales revenue and second, to recognize the cost of the goods sold. The company bought 200,000 pesos worth of inventory on account on December 11, 2021. Paid rent expense on December 11, 2021 for 5,000 pesos. On December 24, 2021, the company sold 200,000 pesos inventory for cash. Again, recording sales transaction has 2 journal entries, first to record the sales, then second to recognize the cost of goods sold. The second step of the accounting process is posting the journal entries to the ledger or T account. Cash. Merchandise inventory. Beginning balances. Debit merchandise inventory 100,000 pesos. Credit cash 100,000 pesos. Merchandise inventory ending balance 100,000 pesos. Cash ending balance negative 100,000 pesos. Cash. Prepaid insurance. Beginning balances. Debit prepaid insurance 50,000 pesos. Credit cash 50,000 pesos. Cash ending balance negative 150,000 pesos. Prepaid insurance ending balance 50,000 pesos. Accounts receivable. Sales revenue. Beginning balances. Debit accounts receivable 10,000 pesos. Credit sales revenue 10,000 pesos. Accounts receivable ending balance 10,000 pesos. Sales revenue ending balance 10,000 pesos. Cost of goods sold. Merchandise inventory. Beginning balances. Debit cost of goods sold 8,000 pesos. Credit merchandise inventory 8,000 pesos. Cost of goods sold ending balance 8,000 pesos. Merchandise inventory ending balance 92,000 pesos. Accounts payable. Merchandise inventory. Beginning balances. Debit merchandise inventory 200,000 pesos. Credit accounts payable 200,000 pesos. Accounts payable ending balance 200,000 pesos. Merchandise inventory ending balance 292,000 pesos. Cash. Rent expense. Beginning balances. Debit rent expense 5,000 pesos. Credit cash 5,000 pesos. Rent expense ending balance 5,000 pesos. Cash ending balance negative 155,000 pesos. Cash. Sales revenue. Beginning balances. Debit cash 200,000 pesos. Credit sales revenue 200,000 pesos. Cash ending balance 45,000 pesos. Sales revenue ending balance 210,000 pesos. Cost of goods sold. Merchandise inventory. Beginning balances. Debit cost of goods sold 160,000 pesos. Credit merchandise inventory 160,000 pesos. Cost of goods sold ending balance 168,000 pesos. Merchandise inventory ending balance 132,000 pesos. After posting journal entries to T account. Third step is the trial balance. From the individual account ledger, we will transfer the ending balances to trial balance. Cash. Merchandise inventory. Accounts receivable. Prepaid insurance. Accounts payable. Sales revenue. Cost of goods sold. Rent expense. Trial balance. Balance sheet. We are done with the first 4 steps. The next video will cover the adjusting journal entry and the adjusted balance sheet.